Welcome to the B.F. Anderson Technical Report for November 19th. This is a book about Warren Buffett, and it's a book written by Robert Hagstrom, along with Bill Miller, who was a portfolio manager of the Legg Mason Value Trust. These guys basically went after the concept of let's duplicate the portfolio management strategy of Warren Buffett. So as you can see here, the quote is, "Focus investing. Robert, we just focus on a few outstanding companies. We're focused investors." Basically what Buffett is saying is that broad diversification is really a necessity for the beginner. Once you start understanding that there are just very few opportunities at any given time, you want to focus on those opportunities and go with that. This is a great book. It's called The Warren Buffett Portfolio, Mastering the Portfolio, which is about Warren Buffett's portfolio management, but it's also called The Buffett Way. Anyway, it's a good book. Now, on the market itself, we are in the NASDAQ here. You can see we peaked in correction, about a 10%, 15% drop here, moving sideways, not really making a lot of progress, but we're still in an uptrend and still in a bull market. Now, as you can see here, this is the weekly NASDAQ. This is the 35-week moving average in an uptrend, and the index itself is in an uptrend. S&P 500 on a monthly basis, we continue on a golden cross. NASDAQ, we continue on a golden cross. And China, we continue on a golden cross. Now, what golden cross means is that the long-term trend of these indexes is positive. So we are in a bull market. Not only do the weekly trends look good, the monthly trends look good, and now the daily trends actually look good. Now, on the aggression index, where we're comparing the NASDAQ to consumer staples or technology to toilet paper. So you can see here that we've been kind of in a correction, stabilizing around the 50-day moving average, somewhat of a pullback, starting to get constructive again. Now on the actual indicator, which is the 40-week moving average, which continues in an uptrend, the ratio is staying above the 40-week moving average. In fact, it's actually staying above the 10-week moving average. So the market continues to look positive. This is the three economic indicators that we look at. This is the Treasury note. As you can see, interest rates popped up here slightly, pulled back a little bit. We're trying to see if interest rates can get back above 1% on the 10-year Treasury. Price of oil, you can see a little bit of improvement there. In fact, starting to develop a little bit of a trend. Now, on the financial stocks, we have also seen an improvement in the financial stocks, which is a tremendous positive. Now, on the S&P 500, on a daily basis, using the 25 and 50-day moving average, we're above both moving averages. Everything looks positive. Here's the 200-day moving average. We're in good shape there. Like I say, we continue to be in a bull market. Now, on new highs, we're seeing a little bit of improvement here. Now, you can remember back here in August, we kind of got up to record levels. This is a 15-day moving average of new highs on the NASDAQ, and we are currently, as of today, at 173. However, the moving average is at 130. We get back into this 150 area. That would be very positive. Now, on the new lows, no problem at all. Look at this. They've totally dried up. We're not getting any new lows because also volatility is dropping. We'll see that here in a minute. Now, on the put-call ratio, which is a way to measure fear and greed using institutions use options as a way to hedge their portfolios. So when you start to see a lot of call buying, you get greed. Well, we're still in greed. So the problem with sentiment is it can stay in greed, stay in fear for a long period of time. Now here's the volatility index, continuing to see improvement here. Would be nice to get readings down in this area down here, but so far so good. Volatility is really dropping off. We're seeing improvement there. Now on the QQQ, which is the Invesco Trust, this is primarily technology stocks, and I'm just pointing out here that technology stocks actually peaked around September the 1st and really haven't been able to get going since. So the technology stocks could be going through a little bit of a consolidation here. Now, on the energy sector, though, you can see a breakout here. Very interesting. However, you have to realize energy is in a downtrend. You've gotten a reversal of the trend somewhat, but I would not call this an uptrend yet, but it's definitely an improvement. Here is, I thought it would be interesting to look at some of the stocks that have to do with travel. Here's Hilton Worldwide, breakout. You know, I kind of think this virus vaccine could be causing this. Here's Marriott Vacations, same thing. You're getting a breakout. Maybe the worst is behind us here. The market is definitely discounting that. Here's Uber, which is, you know, like a taxi service for travel. Looks very positive. In fact, we own the stock. Here is Vail Resorts, which is a ski resort. Look at this, breaking out. You know, it's just saying that I think the market is discounting out into the future and saying that we're going to get this virus behind us. Now, here's something interesting here. This is a ratio where I take the S&P 500 index and I compare it to 30-year Treasury bonds, so that when the line is going up, it's telling you that stocks are doing better than bonds. When the line goes down, bonds are doing better than stocks. So you can see here that starting around 1995, 1996, we went into a real iffy period. Should you be in bonds? Should you be in stocks? So basically that then broke out here recently. So what's starting to happen, I believe, and there's trillions of dollars in the bond market, I believe that we're going to see more of a transition where people are going to move from bonds to stocks. And that's going to be the fuel to get this thing really going. Now, here are the top 5. Pinterest continues to look somewhat good. You know, this is one of the stay-at-home stocks. Earnings announcement, gap up, stock, broke below the gap, somewhat consolidating, but looking like it's trying to get in an uptrend. Looks okay. Here's Freeport-McMoRan. This is copper. Copper is used in everything. It's a very economically sensitive commodity. So anyway, it looks good. I think copper is interesting. Here's the gap, which is retail. Again, you got a nice gap up here, somewhat of a pullback, consolidation, now starting to trend upward. Here is GrowGeneration. This is a new stock that we haven't looked at, but this is an interesting company having to do with marijuana, which is they make the hydroponic equipment to grow marijuana indoors. Here is Saris Therapeutics. Again, the stock somewhat broke out, pulled back, kind of a failed breakout, continuing to watch. That's all. So basically that's it. If you have any questions, please give me a call. Thank you very much.